Hello, everyone. I'm welcoming you back to another installment of the Forex Morning Mastery. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be taking another fresh new look at the financial markets using simple parameters, of course, fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of this asset, and of course use the information we are able to gather on the chart to manage our existing positions, of course, and also strategically position ourselves ahead of the London and New York session today. So, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very much excited to be with you guys today as the market situation is still a little bit risk averse, as majority in the market are still looking up to the economic events coming up today, though we begin to see trickles of this event coming in, especially from the United Kingdom. So we are going to be taking a look at that in a moment, and we have a bunch of more coming in much more later today. With that being said here, okay, I would like to welcome every single one of you who are coming in for the first time. And for those who don't know, during the Forex Morning Mastery, we gather here as a community, as most especially as technical traders, to manage our existing positions if we have any, then strategically position ourselves ahead of the London and New York session. So this happens on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC. And in fact, I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today, and of course be part of the subsequent editions, as the more time you spend with us, the better you get to understand how the strategy we use here works, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. So with that being said here, the first thing we usually do is to, of course, check on the economic calendar. And I would like to zoom this in a little bit so that we can all see things more clearly here. All right, here we go. So I hope we can see this very, very clearly. So as usual, we normally take a quick look at the economic calendar so that we can have a fundamental perspective into what majority in the market will be looking forward to today. And for those of us who have been with me for a while, you know how important this is, as most of the time these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any of this potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event coming in from economic dockets that affect the assets on our watch list. And based on the asset we are looking at this week, remember we have three major assets for this week. We have the USOILSPOT, we have the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And based on these assets, we are going to be focusing on economic dockets of the United States and the United Kingdom. And to make things a little bit clearer and more precise, we shall be taking out all the other economic dockets here, as we want to be focusing on the United States and the United Kingdom. Then if we go take a step further, we want to only focus on high impact event, as this event has a tendency of influencing the market sentiment, which of course, as technical trader, this is what we are looking at using price action to identify. So let's filter that out and let's see what we have here. And here we go. So today we have hold on a second, I would like to make this for this whole week so that we can see what has happened this morning. All right, so here we go. So far today, Tuesday, October 24, you will see here that we have a series of high impact events that everyone in the market will be looking forward to. And in fact, during the early hours of today, I think about 3 hours ago, we were able to witness the claimant count change, the employment change, and the higher low unemployment rate, all from the United Kingdom. So this is a labor sector data, and in fact, from what we were able to see here, the employment change and the higher low unemployment rate actually came in beyond expectations, but it was a little bit lower than the previous data for the higher low unemployment rate. But the employment change came in at minus 82,000, which is a little bit higher than the previous data, giving us a sign that there's been an expansion in the labor sector of the United Kingdom, which is more or less a very positive data. And of course, we want to be looking at how the market is going to be, how the market has been reacting to this event, or probably in anticipation of the upcoming event too as well. Then we also have the S&P Global publications for the CIPS composite, which is more or less an economic indicator that offers insight into the overall health of the United Kingdom's economy by combining both the manufacturing and the services sectors purchasing manager indices together. Then we're also going to be witnessing the which other one is that right here, the S&P Global Manufacturing PMI, both from the United States and the United Kingdom today. So the S&P will be doing publications on this one. And for the manufacturing PMI, this indicates the health of the manufacturing sector, of course, of both economies. And generally speaking, a high reading is considered as an expanding, of course, it suggests an expanding economic activity, which in the long term has a positive effect on the currency of that economy. Then we also have the S&P Global Services PMI, which gauges the well-being of the services sector. And of course, a high reading signifies growth in the sector, providing a window for a broader economic health or growth. So on this one too, a high reading is also considered as positive for the economy too as well. Now let's look at what the previous data and what the expectations are here. Now for the CIPS composite, we have 48.5 for the previous month of September, and consensus is projecting a 48.8 for this month. Now that is a positive sign there. We will look forward to see what the actual data is going to be like. Then we also have the CIPS manufacturing PMI and the CIPS services PMI, where the data here to projects a positive or a expansion in that economy, which is also a positive signal. So everything is looking very, very positive for the pound sterling at this point. And in fact, the S&P Global publication from the United Kingdom will be coming in about 2 minutes from now, and we'll begin to see some traction in that regard in the market. But everything is still very looking bullish. We are going to be looking at that in a moment. Then from the United States economic docket, the S&P Global publication for both the manufacturing PMI and the services PMI isn't looking very promising for the United States. And of course, since the beginning of this week, we've observed how the US dollar has been struggling in comparison to most of its rivals in the market. And will this continue with the situation we have right here, as majority are expecting a contraction in that economy. So we are going to be looking forward to what the actual data is going to be like. And as technical traders, the anticipation of this event alone has a tendency of influencing the market sentiment, which in the long term will be affecting the price action. So talking about price action here, let's run through what is going on the chart from a technical standpoint. Now, the first asset we are going to be taking on today, as usual, is going to be the US oil spot. So I don't know why every time I try to load up my US oil spot chart, it takes quite a while. But let's see. While that loads up, I can see a couple of comments here. I see your comment, Jonah Aruna. Good morning to you and glad to have you around with us this morning. Hikers Diary, good morning to you. Yesterday made a good profit. That's beautiful, Ika's Diary. I'm very excited that you were able to take advantage of that opportunity there yesterday. Every one of us actually did, and it was quite a promising one. And we hope that price will continue further to the upside. Now, with that being said here, it appears that my chart on the US oil has finally come up. And let's look at what we have here on the US oil spot. Now, before I go into the details on the US oil spot, let me clarify here that this analysis we are going to be doing on the Forex Morning Mastery is basically going to be on the 1 hour time frame. Now, for those who missed out on our earlier edition on the Forex Morning Mastery, that is for yesterday's session, then I would encourage you to go back and watch that video, as we were able to do a top-down analysis on this asset where we went from the higher time frame, where we were able to identify key levels and very important structures that we are supposed to use to guide our trading decisions for the week. So please check that link. Check my page. You will see the Forex Morning Mastery for Monday session, where you want to be checking out what we really said on this structure. So now going back into the chart here. So on the US oil spot, the week started on a negative note for us yesterday, as we had our buy position being stopped out in a loss. Now, what really led to the situation here? Let's run through this in detail. Now, yesterday morning, while we were trying to dissect the current market structure, remember we were able to identify a key level which is situated at the $87.50 area, which of course how we use our key level in this community. As long as price remains above the key level, we want to be looking out for market conditions that support the idea of buying that asset. And if price drops below the key level, we definitely want to be looking out for patterns and structures that supports the idea of selling. Now, besides the key level at the $87.50 level, it was very clear that the week started on a bearish note, of course, and we saw price drop into the $86.60 level, which happens to be the support line for this week. Then we saw price climb back up into that key level, giving us a beautiful flat channel to work with for yesterday's trading session. And of course, a flat channel obviously emphasized the levels of indecision going on in the market at that point in time. And whenever we notice this kind of situation in this community, we have no other choice than to exercise patience and wait for either the breakout of that resistant line of that range to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And with that scenario in mind, and considering the fact that price action has been bullish in the last couple of weeks, considering the geopolitical tension going on in the Middle East, we were looking forward to buying opportunities at the breakout of the $87.50 area. And of course, we had the buy position triggered here, and price action moved about, how many pips was that? Moved about I think 40 pips thereabout before the sellers came in to push price further to the downside, taking us out of our position in the loss. And interesting enough, we saw how price went on to break down the support line to trigger our sell position, as you will see here. And since yesterday, we have been selling the US oil spot at this point. Now, remember that we also identified a key level at the, not a key level, a support level at the $85.50 area, where we said if price breaks down that structure, we will be adding more position to our existing trade. And as you will see right now, we already have 2 positions running at this point in time. And for those of us who took advantage of these opportunities, well done to you for being on standby to capitalize on this move. Now, for those who have sold right from the first entry at the support line here, you will currently be having about 175 pips running in profit right now. And the second position, which was triggered below the $85.50 level, is currently running with about 75 pips. So roughly speaking, we have over 200 pips running in profit on the US All Spot, which is not a bad start to the week. Actually, we were able to recoup the loss we incurred from the buy position yesterday, which is a very, very good start to recover from whatever situation we were at the beginning of the week. So the next thing we want to be doing right now, of course, you know what we do next, is to secure the current sell position by moving our stop losses accordingly. Well, personally speaking, the breakdown of the $85.50 level is not yet going to be considered as a true breakdown at this point in time, as we will still need some retest of that structure to confirm that truly price is likely going further to the downside. So in that regard, I would advise that we move all stop losses to anywhere above the $85.95 area. Remember that we do want to be giving enough room for price action to break. So kindly move your stop loss while you consider that enough room is needed to allow price action to breed at this point in time. So now, with a well secured position at this juncture, what is going to be our next line of action for today? What is our plans? What are we going to be doing? Is the sellers going to continue the momentum to the downside, or are there chances that buyers will come in? And one other thing I would like to mention here from a geopolitical perspective is the current tension going on in the Middle East, and there are insinuations that that the Israelis may stall their ground offensive in the nearest future due to international pressure from the international community. And if this happens, then this might likely reduce the uncertainty around the oil supply. And if this happens, we might likely be seeing price dropping to the downside. So if this is going to be the case, price may likely drop. So we need to be very, very careful at this point. Now, to help guide our trading decisions for today, we have a structure, we have a parameter we are going to be using to guide our trading decisions. So let me share with you what we are going to be using to guide our moves for today. Now, if you look at what has been going on in this market since last week Friday, you will see that price action had consistently found lower highs and lower lows. And as a result of this, we have a descending trend line to work with. In fact, we have a couple of them. We have this first one here after connecting the series of lower highs since last week Friday, and we also have the second one right here. Now, this trend lines here is going to be playing a major role in guiding our trading activities for today's trading session. Now, what this simply means is that as long as price action remains below this descending trend line, we shall feel very comfortable in our sell position, and of course look out for more selling opportunities at this point. And with the way things are going right now, price action still remains below that descending trend line, so we shall continue to hold on to our bearish bias as we've seen price break down the $85.50 level. Now, for those of us who at some way or the other missed out on these opportunities, well, let's exercise patience and see if the market will be giving us new conditions to join the bearish move. Now, from a technical standpoint, when price breaks down a key structure such as the $85.50 level, as you will see here, we expect that at some point in time, price may likely come back, retest the structure, and the inability of buyers to break out of the $85.50 level will be a beautiful sign that we will want to continue to the downside. And of course, this would reflect on the chart as continued selling pressure below the $85.50 level. Then we want to be part of more selling opportunities in this market. So let's see how the market will play out. This could take about 2 to 3 hours before it evolves into a tradable setup. So patience is hereby required at this point in time. And like I said earlier, for those who already have a sell position, kindly move your stop losses, secure this current sell position while we wait and see how the market is going to be reacting to the $85.50 level. And also remember that you do want to be marking out these trend lines, as they will be needed to guide our trading decisions for today. Now, with that being said here, with the current technical structure screaming bearish, that does not mean that we cannot take into consideration the potentials of buyers too. Now, in this case scenario here, and considering the uncertainty surrounding the escalation in the Middle East, we might still see some potential that buyers could come in at any point in time. And if that is going to be the case, what is it that we want to see on this chart that will make us change our bias from bearish to bullish? Now, of course, for those of us who have been in this community for a while now, you definitely know what we will be looking out for. We will need price action to breach that as descending trend line, break out of that descending trend line, and at that point, that will give us a sign that the trend line may no longer be able to negate the bullish attempt anymore. And of course, that will be the first time price will be breaking out of that descending trend line. So for me to consider buying here, I would like to see price climb, break out of the descending trend line, and then do a retest of structure, because a confirmation is needed here. A breakout of the trend line could still turn out to be a false breakout. Remember that. So if price breaks out, we need some confirmations to happen, which definitely would reflect on the chart as price action retracing to retest the trend line or the $85.50 level. And most importantly, what we want to see is continued buy pressure, showing us signs that sellers are finding it difficult to drop back below that descending trend line, giving us a beautiful signal to join an uptrend scenario. Now, that is the only condition that will make us consider buying the US All Spot today. And of course, I will be with you in my on my trading view platform and Telegram platforms to give you updates as at when due. So these are my views on the US All Spot. At this point in time, we remain bearish as long as price action remain below the $85.50 level and that descending trend line here. As long as price remain there below that structure, we hold on to a bearish bias. But as soon as we notice a breakout retest of structure, we definitely want to be joining an uptrend situation. So I will be giving you update as at when due whenever any significant setup unfolds on the chart, right in the comment section of both my TradingView and Telegram platform. So these are my views here on the US All Spot. If you have any questions whatsoever as regards to my explanations, or you need further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list is the GBPUSD, and the GBPUSD at this point in time is going to be considered as the most profitable asset on our watch list since the week began, as we were able to scoop in over 200 pips on this asset with two buy positions after the breakout of the 1.21660 level. These were the levels we projected during our live session yesterday, and we also added one more had the breakout of the 1.21800 level. Now let's quickly run through what really happened yesterday that led to the situation to buy the GBP USD. Now, if you look at the structure yesterday, we had a consolidation phase actually at the beginning of the week where price was confined within that range between the 1.21660 level and the 1.21450 area to give us an insight into the level of indecision at that particular point in time. And besides this range here was this descending trend line which we spotted on the higher time frame. Remember, we had this descending trend line where we were looking forward to a buying opportunity if price breaks out and retest that trend line, which will also be breaking out of the resistant line of that range to give us our first buy position. And I told us all yesterday that we should allow our stop losses to be right below the support level at the 1.21450 area to give enough room for price action to breach. So we had a stop loss of about 25 pip stop loss on this current buy position, which makes it very much a profitable trade for us. Making the risk reward ratio a very, very positive one for us to take advantage of. And since yesterday we have been buying, we bought the 1.21660 and the 1.2180 area. And as at this morning, I did an update on the GBP USD. For those of us who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing our positions for today. And right now, we saw price did some couple of rejection of that 1.22750 area, though we had a little break out of the structure this morning, but we saw this bearish move to the downside in a sign that there could be some profit-taking activities going on around that area in anticipation of the S&P publication that we were looking forward to in the United Kingdom. Now, the S&P has finally been published. Let's run through what has gone on here. So from the data we have here from the S&P publication, you will see that the manufacturing sector had an witnessed expansion in the month of October, giving us about a positive deviation of 0.16 beyond expectation, as you will see here, and actually beyond the previous data that came in for last month. Now, for the services sector, we have a negative deviation of minus 0.18 as the data came in 49.2, a little bit below the expectation and a little bit below the previous data for the month of September, which is not a bad thing. It's a mixed reaction at this point in time. So we do want to see how the market has reacted to this data. Now, if we go back into the chart and look at things from a technical standpoint, so this is the hour that the S&P publication came in, as we saw price drop down in immediate reaction to that data. And what we're seeing here is buy pressure resuming all over again, giving us something that looks like an hammer candle at this point, which technically is a sign that buyers are still very present at this juncture in the market. But we cannot say that for sure because this candle still has about 11 minutes to close. So we need to wait for this candle to close to actually see what things are looking like here. Then if we consider the buy pressure we notice around this area, you will see that it is peculiar with what has been happening since the later part of the New York session yesterday. So if we try to use our line chart to fine tune something out of this, I think we could use around the 1.22450 area as a yardstick to guide our trading decisions going forward. So I would like to mark out this level here, 1.22450 level, which you also want to be doing right now due to the situation going on at this point in time. So marking out this level, you will see how beautifully, despite that bearish traction that came in following the publication of the S&P, we saw that price came back into the structure, did a sharp rejection of that area. And look at what has been going on in the past, all through the early hours of today. Buy pressure. So this is a sign that sellers are finding it difficult to break through that level, further emphasizing the strength of the buyers at this point. And for those of us who are with me on both my TradingView and Telegram platform, I told us that we can have a buy stop order above the 1.22750 area to capitalize on the next move. In fact, I do want to be readjusting that level right now because of what I'm seeing right here. So I will just do it at 1.22700 area. So let me do some readjustment. Please do that immediately on your chart right now. And let's have something like this. So we want to be looking at anywhere above the 1.22700 area to add more buy positions to our existing trade. Now, there are two ways to which we can capitalize on this. Now, for those of us who are part of this profitable journey so far, that is, if you had bought at the time we bought around the 1.21660, you will currently be running with over 200 pips in profit at this point in time. Now, you can afford to leverage on the profit you had made. Since you are very profitable, you can afford to risk some of the profit you had made by placing a buy stop order above the 1.22700 level to capitalize on the uptrend continuation. Then having your stop loss somewhere right below the 1.22450 area, dovetailed into about 25 to 30 pips to protect your position on this one. However, if you are new with us, we want to see a breakout happen first of all, retest of structure of that area to join that, which has already happened. As you will see, we already have a breakout. Price action has come back to retest the structure, so everyone can afford to place a buy stop order above the 1.22700 area to capitalize on the uptrend continuation. Now, we can still add more positions here. The highest point price action has gotten to for this week is around the 1.22, let's see, 22890 level. So we want to be marking that level out as well. So we want to make sure that we can milk this move all 22890. Let's see. 22890 level. So we have another level there, which is the highest point price action has been for this week. We want to be adding more positions above that area. So if you're profitable so far, just place a buy stop order above that structure and let's capitalize on that uptrend move. Now, to make things a little bit much easier for us, we want to have a trend line marked out where we are going to be using this to further make us feel comfortable in our buy position. So as long as price remains above that trend line, let me adjust this a little bit so that I can capture most of these pivot lows, I think. All right, so here we go. So we have this trend line marked out. So as long as price remains above this trend line, we shall feel very comfortable in our buy position. So things can happen like price dropping down, but as long as it remains above that trend line, we feel comfortable in that buy position. Now, in as much as we're looking out for buying opportunities in this market, we cannot ignore the potentials that sellers can also come in. Though the market outlook here is still very, very bullish at this point in time. And of course, we could see some profit-taking activities come in. Now, remember, price action broke out of a significant structure here, had the area between the 1.21800 level and the 1.21600 area yesterday. And from a technical standpoint, you know that when price breaks out of a key structure or a key zone such as what we have here, we expect that some point in time there will be some profit taking activities, which might reflect on the chart as retracement back into that structure to incite another wave of bullish momentum. This is a possibility we also want to be considering too while we monitor price action on the GBP USD. So if today anything like a breakdown of that ascending trend line happens in such a way that price action also breaks down this support line at the 1.22450 level, we might likely be seeing a retracement phase back into that zone between the 1.218 and the 1.216600 area, which happens to be our entry point for this week. Now, if price goes down, then we want to come back down into this area to position ourselves for the next move. Now, depending on how price reacts to the zone will determine if we are going to be joining an uptrend continuation. Now, for those of us who are short-term traders like scalpers and the likes, well, you might want to capitalize on this counter trend opportunity, which will be dovetailing to a minimum of 65 pips to a maximum of about 100 pips if price continues further to the downside. So for counter trend traders, you might want to look out for the breakdown retest of the 1.22450 level to capitalize on a bearish move. So let's mark these levels out on our chart. They will be guiding us for today's trading session. Mark it out, mark those trend lines out, and let's see how the market is going to be reacting to the structure. And of course, if there is anything significant that happens along the line, I will be giving you updates on both my TradingView and Telegram platform. So at this point in time, I do not know if you have any questions whatsoever. If you do, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart. All right, so I see a couple of comments from Ika's Diary. Ika's Diary is asking that once a key level was broken or is broken and retested, how can we determine that the retest is over and now it is time to enter for a trade in correct time? So, because sometimes I enter and exit from trade to, okay. I think I understand what you are trying to say, Ika's Diary. Now, first of all, the market, first of all, is very, very important for you to know that the market is a dynamic environment. So nothing is cast in stone here. No one knows when a price is going to move or when it is not. All we are just doing here is to find an hedge that we can use to guide our trading decisions. So when I say price action breakout retest a structure, all you want to see is patterns around that retest. Once price, okay, let me give an instance in this case scenario. Let's say the 1.22890 level, and you want to wait for price action to break out and retest this level. Let's say, for instance, now if price breaks out of this level on the 1 hour time frame as we are right now, what I want to be doing is to scale down into the lower time frame to look out for price coming back into that structure. In fact, price can come back into that structure. It can even drop to as far back as that trend line. Now, what we are going to be looking out for here to make us feel comfortable of joining the uptrend scenario is our patterns like double bottom structures, head and shoulder patterns, falling wedge. This is where it is very important for you to know your technical patterns very, very well. So we could see something like double bottom structures like this, or higher lows, sort of a thing, then at this point we want to say, okay, fine, I think it is time we can start joining that uptrend move. It's not necessarily mean that you want to join around that area. All we are just looking out for are structures and patterns that support the idea that it is time to start buying around that zone. So we don't know specifically which particular area it's going to happen, but if you are on the lookout and you are very patient, you look out for the structures, you will definitely join at the right time. And always remember that you're having a stop loss in place to protect your position. So if you have a stop loss in place, you have a stop loss, remember to give enough room for price action to breathe. So in this case scenario, if you have your stop losses, let's say you're joining around the 1.22890, you can have your stop loss right below that ascending trend line, which of course you know the ascending trend line is the one that is supporting our bullish expectations in this market. And if price breaks down the ascending trend line, then the bullish momentum is negated. So if price action breaks out the 1.2289, you want to have your stop loss below the trend line. So if price breaks down the trend line, you know that the bullish momentum is negated. So if you have your stop loss in place, there is no point worrying. So let go of that trade and allow the trade to do its thing. If you get stopped out, it's okay. There are quite a lot of opportunities in the market. I do hope I made myself very, very clear here. So it is very important to know your structures, your patterns very, very well, as you will be needing them in this kind of scenario when you are looking for the completion of a retest of structure. So please let me know if you got my explanation very clearly and if there is need for me to add more insights into what you do not understand. So with that being said here, okay, I see a comment here from Sonny Paul. Paul is asking that provide the stop loss for the various entry scenarios. I lost out of GBPUSD because of my stop loss. Now, that's I've been emphasizing these times without numbers in this community. I'm trying as much as possible not to be a signal provider. I am not advising you to take your trades. Everything we say here is for educational purposes. So I want you to use your own discretion. It depends on your portfolio. Now, if you have a $100 portfolio, it depends on what you can afford. If you have an $100 portfolio and you're risking 1% or 2% of your account, you might not be able to take the trade. But if you have a $2,000 account and you are risking 1% or 2% of your account and your stop loss is around 50 or 100 pips, you can afford to take your trade. So it depends. It's subject to who you are. What is your account size? This is why I usually mention in my videos that consult a professional financial advisor to advise you of your situation before you jump into any position. So whenever you're having a position or entry point, please ensure you have enough breathing space to capitalize to protect your position size. That is why we have levels on the chart. So for instance, if you are joining above the 1.22890 area, as you will see here, we have multiple levels right below. We have structures like the 1.22700 area, a structure here. We also have a structure right here too. Now, in this kind of scenario, your trend line here is going to be the barrier that will tell you that if price drops below that trend line, then definitely the bullish momentum is off. So having your stop loss right below the trend line makes quite a lot of sense. Now, if you have a level, it's not advisable to just place your stop loss on that same level. You want to give enough room right below the level just in case we have some stopped out situation happen in the market. So it's more or less like it's a flexible thing. You want to be very, very dynamic in the financial market. You can chat me up personally and we can talk about that. I have tried as much as possible not to be a service provider on this channel. I do hope I make myself clear, very clear there, Sonny Paul. And if you have any question for that, please let me know. And if it's something as regards to this, you can chat me up personally and we can talk about this in detail. All right. Thank you very much, Sonny Paul. So in the absence of no other questions, let's move right into the next asset on our watch list. All right. So the next asset on our watch list right now is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. Now, on the gold spot, in fact, we've been in the loss for quite a long time now, since the beginning of the week, despite the fact that price still remains above our demand zone. And during the early hours of today, I actually did an update on my platforms where I talked about how we saw resumption of buy pressure during the Asian session this morning, and we saw some significant retracement in the US bond yields, which actually is affecting the gold too as well. And if the US yield continue to drop, it could build a platform for the gold to increase in momentum. Now, in the case scenario here, from a technical standpoint, for those of us who are part of the live session yesterday, remember that we had this scenario. Let me zoom out a little bit so that we can see things more clearly. So the first thing we did here at the beginning of the week was to acknowledge the fact that price action has been bullish, especially since the beginning of this month. And as a result of that, we have this ascending trend line to work with. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for buying opportunities. Now, with the way things are going here, if you look at the structure, remember we had a buy entry around the $1,978.50 yesterday, and since that moment, price action has been running within the below that level, giving us a loss of about, let's see, how many pips loss do we have right now? We have about 65 pips loss at this point in time. Now, if we get taken out of this position, then we might likely be seeing a situation where price will go on to break down the support line, retest it back into this ascending trend line, where the appearance of buy pressure here may incite another uptrend scenario. So if price continues to drop at this juncture, we would want to see how the market is going to be reacting to that ascending trend line. So if we see double bottom structure around that area or head and shoulder patterns, then we want to mark out our neckline so that we can capitalize on the uptrend move. However, if price breaks down the ascending trend line, then we do want to be getting ready for a sell-off. Now, let's go back into what the current structure is saying. Now, if you look at what has been going on here since the beginning of the week, it's quite clear that price action is still trapped within this range between the $1,978.50 level and the $1,965 area, to emphasize the level of indecision at this point in time. And you know how we do it in this community. When we have this kind of flat channel, a range which emphasize the uncertainty in the market, we have no other choice than to exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And for the fact that price action still remains within this range, and we already have a buy position triggered, let's remain patient and see what will happen in the next couple of hours on this one. Then there's another thing I would like to emphasize here, which has been peculiar with the structure, especially within that range price action has been since yesterday. Now, if you look at the structure closely, you will see that price action has been trading this 1,970 area, has been playing a major role in negating all attempt by the sellers to break through that level. Now, let's look at this and mark that level out right here. Now, I will share with you in a moment what I mean, but I just want us to mark this level out. Very, very important, as it has been playing a major role since the beginning of this week. In fact, I want to extend it out to this point. Now, if you look at this structure here closely, it's still within the range. You can see it's still within the range. But most importantly is the fact that sellers have been finding it difficult to break through that level. Look at what has been going on here since the beginning of the week. So I want to highlight them. So even price was unable to come even close to this level, during the later part of the New York session. And in fact, in the last hour, we saw another sharp rejection of the 1,970. Now, it is quite clear that sellers are struggling within this range, despite the fact that we are unable to break out of the $1,978.50 level, which is still giving me that sense of comfort that we might still be going bullish. Then in addition to the 1,970 area is the descending trend line I was able to spot here after taking into consideration the nature of price action since last week Friday. So we have a descending trend line here duly marked out. And of course, you do want to be marking this trend line out on your chart. So you will see that since Friday, price was respecting the trend line, selling pressure here. We also saw selling pressure here too as well. Selling pressure here throughout yesterday's trading session. And not until the early hours of today, we saw price broke out of that trend line. And from a technical standpoint, when price breaks out of a structure such as a trend line we have here, price is likely going to come back and retest the structure where the appearance of buy pressure here could give us a beautiful opportunity to join the uptrend scenario. And as it is right now, price is still struggling. Sellers are still struggling to break down both the descending trend line and the 1,970 area, which for me still gives me that sense of comfort to still be looking forward to more buying opportunities in this market. So that is why I am still staying in this trade in terms of the bullish expectations here. Now, in as much as we're looking out for buying opportunities here, if at any point in time today price action does break down the 1,970, not only just breaking down the 1,970, I also want to see price action do a retest of that structure to confirm to me that buyers are no longer having a say in this market. And of course, this will reflect on the chart as price coming back to reject this area. That is, buyers are finding it difficult to climb back above the 1,970, and on our lower time frame we'll continue to see something like selling pressure around this area, which will now be revealing signs that sellers may likely be getting ready to sell. And if we join in, we sell, then a further breakdown of the $1,965 area will welcome more selling opportunities. Then we can join that momentum all the way to the downside. Then as soon as price gets into that ascending trend line we spotted on the 4 hours time frame, move all stop losses, secure your position around the 1,965 while we wait and see how the market will be reacting to that ascending trend line to determine if we are going to be adding more sell positions to our existing trade or getting ready for another wave of bullish momentum. But trust me, I'm going to be with you in the comment section of both my TradingView and Telegram platforms to give you updates on what we are going to be doing if price action gets into that area. But at this point in time, I will continue to hold on to a bullish bias as long as price still remains above that 1,970 level, which is still within that range we spotted at the beginning of this week. And if the bullish momentum continues in such a way that we have a breakout of the 1,985, we do want to be adding more buy positions, then more buy positions again at the breakout of the 1,990. So I still hold on to a bullish bias unless price action takes us out of this position, breaking down the 1,970, retesting the structure and breaking down the 1,965. Then I can feel comfortable selling the XAUUSD. So this is my view here on the XAUUSD. Very simple setup. All we just need to do is allow our structures to mature before we jump into any positions. So I don't know if you have any questions whatsoever. I will be taking the next 10 to 15 seconds off to see if there are any questions I also give you that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And don't forget to support the project. If you found this content helpful and useful in making your independent trading decisions for today, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and for those who had already liked, I really do appreciate your support. Is the cheapest way you can support me. Please just click on the like button and I'll be very glad you did. Thank you very much. So if you have any questions whatsoever, feel free to let me know in the comment section. I see your comment here, Ika's Diary. You're asking when are we scaling down to a lower time frame in order to see the price action in a key level. What will be the ideal time frame which shows the price action clearly? Which asset are you talking about, the Ika's Diary? Please let me know in the comment section. Which asset are you talking about, and which asset are you planning to go to the lower time frame? I don't know. Please let me know in the comment section. And that reminds me, I dropped the link to the XAUUSD live window right in the comment section. It's pinned at the top of the comment section. So the XAUUSD live window is a platform born out of popular demand in this community, where we gathered there during the New York session. I think the first 6-7 hours of the New York session, we are here together to monitor the XAUUSD real-time price action. So during that session, we look out for new opportunities. I give you ideas on how we are going to be joining the next move and how we are going to be managing our existing position. So I look forward to seeing you right in the XAUUSD live window, and let's make it a fun-filled experience together here in this community. GBPUSD, XAUUSD, I think I mentioned this earlier, Ika's Diary. I think I mentioned this earlier. Once the breakout happens and price action comes back to retest the structure is when you want to be scaling down into the lower time frame. A breakout, first of all, needs to happen. Then price action comes back. When it comes back into the entry, into the structure that was broken, then you can scale down to the lower time frame to monitor how price action is reacting to that structure. And like I said earlier, it's not all the time price action will come back into the structure and stay there and move up. It may drop down, but what you want to be looking out for are patterns and structures that supports the idea of buying. That is, if it breaks above the structure, and if it breaks down below the structure, you want to be looking out for patterns and structures that supports the idea of selling. And that's where you need to understand, you need to know your technical patterns is very, very important. Patterns like reversal patterns, double bottom structures, head and shoulder patterns, falling wedge, this is where they come in handy. So I hope I re-explained that clearly to you, Ika's Diary. Could the gap in the market affect our trading decisions? Juliet Kirema, could the gap in the markets Of course, the gap, market affects the trading decisions. Whichever direction the gap goes to shows the direction where majority are heading to. So if it's a bullish gap, then definitely price is likely going to be going to the upside, and if it's bearish gap, price is likely going to the downside. So it of course affects the market. Juliet Kirema, good morning to you. Glad to have you around with us this morning. All right, Ika's Diary, I'm glad you found that useful. And I think it's on this note we'll have to call it a day here. It has been a wonderful moment with you guys today, as I really enjoyed every single moment I had with you guys. And in fact, we were able to attend to 3 major assets, which are the assets we've been monitoring since the beginning of the week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot, and all of which we were able to identify simple setup using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market, hereby giving us valuable information needed to strategically position ourselves ahead of the London and the New York session today. So I just encourage us all to exercise patience, allow our structures to mature before we jump into any positions. So it's on this note. Oh, for those who join us for the first time, I do hope you are able to gain one or two things from this session today. And in fact, I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand how our strategy works and eventually be able to use the information here to make your own independent trading decisions. So once again, you are welcome on board. So we finally saw the XAUUSD being taken out right now, as selling momentum has finally increased at this point in time. So price is right below the 1,970. So at this point, we want to see how the market is going to be reacting to the structure. So the current candle still has about 40 minutes to close. So let's see how this is going to react. And if it further goes down below the 1,965, we will be joining the sell right away. So I wish you all the best of luck, and looking forward to seeing you guys right in the comment section of both my TradingView and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.